All right, let's talk about money. In the next few minutes, we're going to pull back the curtain on the whole thing and demystify the world of finance.
You know that feeling, right? It's like money is this giant game that everyone's playing, but you never got handed the official rule book. You get paid, you spend, but it feels like some invisible hand is just moving your pieces around the board.
Well, consider this your rule book. We're going to break down the absolutely essential concepts so you can start feeling like a pawn and start playing like a pro.
Okay, first up, let's get into the stuff that affects your money every single day, whether you're thinking about it or not.
Yes, everybody's favorite topic, taxes. You know that moment you look at your paycheck and wonder, hey, where'd that big chunk go? Well, that's the price for things like roads, schools, and safety. It's the cost of civilization, as they say.
And it's not just one cut either. They take a piece when you earn, a piece when you spend, and yeah, even when your investments do well. And some of it, like Social Security and Medicare, you can almost think of as a kind of forced savings plan for your own retirement and healthcare down the road.
So what about where you keep your money? We all have this image of a bank as a giant, super secure vault where our cash just sits waiting for us. But that's not really how it works. The truth is, your bank is more like a financial matchmaker.
This whole matchmaking system is called fractional reserve banking. It means the bank only keeps a small fraction of everyone's money on hand. They're making a pretty solid bet that we aren't all going to show up and demand all of our cash at the exact same time. This is how they can lend out the rest to people for mortgages or business loans. It's also why your deposits are insured, just in case.
And how do those lenders decide if they can trust you with a loan? They look at this one little number. And let's be super clear. Your credit score isn't about how much money you have. It's a report card for how reliable you are at paying back what you borrow. A high score opens doors. A low one can slam them shut.
Okay, let's zoom out from our daily lives for a minute. Because beyond our personal bank accounts, there are these massive, invisible forces constantly at play, shaping the very value of the money in your wallet. And one of the most powerful forces out there is interest. Think of it as having two completely different personalities. When you owe money, interest is a relentless enemy that never sleeps. But when you save or invest, it becomes the best employee you'll ever have, working 24/7 to make you richer.
And here's where that enemy gets really dangerous. When you let debt sit, the interest compounds. That means you start paying interest on your interest. It's a vicious cycle that can turn a tiny forgotten purchase, like a burrito on a credit card, into a massive problem down the line.
Now, what about the value of your money itself? That's where inflation comes in. You've felt this. It's that subtle sense that your money just doesn't stretch as far as it did last year. The $5 bill is still a $5 bill, but its actual purchasing power is slowly melting away.
Now, believe it or not, a little bit of inflation is actually considered normal. Economists generally aim for about 2% a year. It's seen as predictable, and it kind of keeps the economic engine humming along. The trouble starts when it gets out of control, and your paycheck can't keep up.
And when the whole economy takes a major downturn for months, that's what we call a recession. It's a pretty painful reset. It's when you start hearing about layoffs, the stock market takes a nosedive, and pretty much everyone starts tightening their belts.
You can think of the economy like a big party. The good times, the boom, that's when the party is absolutely raging. Confidence is high, people are spending. But every party has to end. Eventually the music stops, the harsh lights come on, and everyone realizes the bill is due. That's the bust. That's the recession. It's the economic hangover.
So now that we know the basic rules and the bigger forces at play, how do you actually play this game to win? How do you use all this knowledge to your advantage?
The number one strategy, without a doubt, is investing. This is the crucial move. It's how you shift from just trading your time for money to trading your money for more money. You're putting your cash to work, so it's not just sitting around getting eaten away by inflation.
And there are a few main ways to do that. You can buy stocks, which are basically tiny ownership slices of a company, or bonds, where you're essentially loaning money to a government or a big corporation. You can get into real estate, or a really easy way to start is with funds, which are like pre-made baskets of different investments all bundled together for you.
But to really get a handle on winning, we have to step back for a second. Because here's the wild thing about money. It isn't technically real. A dollar bill is just a piece of paper. The only reason it has any value at all is because we, as a society, all collectively agree that it does.
And that leads us to the core concept here, value. Real wealth isn't about hoarding the most pieces of paper.
It's about creating things that other people perceive as valuable. Think about it. Steve Jobs became wealthy because he created something that millions of people found incredibly valuable, and they were happy to trade their money for it. The more value you provide to the world, the more you can earn.
Okay, so we've got the rules, the forces, and the strategies. But there's one last piece of the puzzle, and it's the single most powerful asset you will ever possess.
And that asset is time. It's really that simple. You can always make more money. You can lose it all and earn it back. But you can never, ever get more time. It's the one resource that's truly finite, and how you use it will determine everything.
Just look at the magic of time in action right here. Player 1 starts early, just $100 a month. Player 2 waits 15 years, but invests 3 times as much. And who wins? Player 1 by a long shot. That's the power of compound interest working overtime. In this game, a head start is way more valuable than a bigger bet later on.
So the crucial point is this. Building wealth isn't a get-rich-quick scheme. It's a long game, built over decades, not days. The rules are simpler than you might think, and the most powerful piece you have on the entire board is the time you have right now.